expectations across categories. Prakash, thanks so much for taking us through that. We also have Ashi Anand, founder and CEO at IME Capital, joining us on the show. And Ashi, hi, afternoon, and thanks for your time today. My colleague Prakash was just highlighting the capex spends and the pattern that the government has followed so far, and how the private sector is also expected to contribute towards this entire capex spend that we're seeing. Give us a sense of where do you think the government and the private capex spends are heading, and how or what that could mean for our overall infra sector.
Great. Firstly, thanks for having me on the show. It is actually very interesting because if you just look at the markets and you just step back a couple of years, 2023 and 2024, the entire market rally was really driven quite significantly by capex, real estate, all forms of capital formation kind of sectors. This has actually taken a bit of a breather over the last year. And if you just look at what's been happening, the entire 2023 to 24 move in terms of the capex revival was largely driven by a pickup in government capex, while private capex still continued to lag. You now have kind of government capex at a fairly high base. And what we have been seeing over the past couple of budgets is you no longer are kind of increasing capex spends higher than the overall budget. And therefore, it is very, very important for the private sector to kind of come in and actually start contributing in terms of capital formation and capex for this kind of segment to continue to drive market performance going forward. I think it's still fairly early days. You still have reasonable amounts of unutilized capacities. You do need to have some clarity around what's happening on global trade. But any kind of signs of a revival in kind of capex, especially private sector capex, could actually really help the market get a whole new leg of growth up. And the capex theme, which has been kind of underperforming over the last 6 to 9 months, could actually start to come back.
All right, so that's the take coming in on select pockets, which can be a beneficiary with respect to the whole capex story once again coming into flavor. But other than that, the PSU banking space is doing very well today. Just yesterday, we have seen those private banking names like Axis and Kotak Mahindra Bank doing the heavyweight lifting. But today, stocks like SBI, other than that, some of these counters like BOB, Canara Bank, PNB, they are actually up anywhere between 2 to 4%. But Nagraj, help us understand what is your preferred bet within the PSU banking space? Any stock where you feel that's still offering very good opportunity?
I think in the whole host of our PSU basket is moving up with this news, and SBI, of course, certainly leading from the front. And overall chart pattern for the SBI is looking at decisive upside breakout of the larger range movement. That is the one which is likely to lead the sector further. And the second, the Canara Bank and Punjab National Bank are the one which are showing some significant moment after the consolidation moment. So PNB, Canara Bank, and State Bank are the one which are likely to show a continuation of uptrend from here onwards.
Okay, so that's some of the names that are looking attractive to Nagraj at the moment. Just revisiting what the market is doing, because like Shishti was mentioning, we've seen that little bit of an uptick coming in the markets. So 25,333, almost at the day's highest point, a 4% uptick coming in for the Nifty. You have Nifty Bank that is also picking up significant steam, because 0.6% uptick is what we're seeing on Nifty Bank right now. And it's actually SBI that's driving that rally, a 3% uptick now on SBI. Followed by Kotak. Kotak was up 1.5% yesterday as well. In fact, it's 1.5% today, and it was up 3% yesterday. So good moves coming in from Kotak as well. But while we're talking about the banking space in SBI, SBI has said it has completed stake sale in Yes Bank worth around 8,900 crore rupees. The lender sold stake in Yes Bank to Sumitomo Mitsui Banking Corporation, belonging to the Sumitomo Mitsui Financial Group. Ankur is here with more details on the stake sale. Ankur.
Yes, the deal is getting implemented, and we have learned today that State Bank of India has now sold their stake in Yes Bank. Still, after this announcement, 10% of the stake remain in Yes Bank. Total consideration was around 8,800 crore, and this was on a pre-agreed price of 21.5 per share. But not only the State Bank of India, there has been other deals as well. You would have seen there was a block deal which was there in Yes Bank a week back, and more than that, the 4.2% stake of Carlyle Group has also now been sold to Sumitomo Mitsui Financial Group. Now this is important because you remember that Reserve Bank of India had given approval for a stake sale of up to 24.99%, and now after this stake sale, the total stake which Sumitomo Mitsui have bought is 24.2%. So overall, 20% stake sale was a deal which was announced during Yes Bank, whereby State Bank of India, of course, being the largest lender, has got an exit with around 10% stake remaining. But other banks like Kotak Mahindra Bank and Bandhan Bank, among others, were also part of that stake sale. So overall, now the deal is getting implemented. Reserve Bank of India and CCI has already given approval, and finally we may see this getting completed in this quarter itself, as it was guided by the management earlier.
All right, thank you so much, Ankur, for getting us all those details. But Ashi, wanted to have your take on this one, because this was very well known that some of these banking majors will take their hands off SBI, and Japanese bank SMBC will be taking over. Along with that, Ashi, help us understand specifically on Yes Bank, how do you see this whole story unfolding? Do you believe that it can be a good story going ahead in terms of the financial improvement? What's your overall take on this one?
Sure. So firstly, I think I must commend the kind of government in terms of the way they handled the whole Yes Bank kind of blow up. You have actually had a bunch of financial firms go and rescue the company, and actually in a manner where they've actually made money in that entire rescue attempt. So that is kind of, it is probably an extremely well kind of done recovery that has happened for Yes Bank. Now, in terms of the kind of path ahead, Yes Bank was a kind of largely institutionalized SME lending kind of bank, and doing much more aggressive forms of structured lending, lending to kind of loans against shares, loans to promoters, etc. Now, this was very high yielding, and it's really what helped Yes Bank generate the ROA, but it's also what actually led to all the trouble. The transition of Yes Bank away from this large institutional towards a more retail-oriented bank, where kind of credit costs are more manageable, where also you have a certain level of diversification in terms of your lending, that is actually a transition which is still underway. It is still probably too early to really indicate whether that is a success or not. Now, within that kind of context, we actually prefer a lot of other banking names where the strategy is a lot clearer. They are implementing on a known strategy that is working. And there is no shortage of attractive kind of banks to buy, banks of reasonably high quality available at decent valuations. And which is where we'd actually prefer some of those as compared to kind of taking a bet on a bank, which is still in the middle of a transition, and what the kind of eventual outcome is in terms of the transition, how they'll manage credit costs and the new segments. A lot of these answers are not yet known. And which is why, at least as in Yes Bank, it's something that we are at least not looking very closely at.
Thanks for that view coming in, and stay with us. We'll just slip into a very short break and be right back, talk more about the day that was.